The ChatGPT AI service is truly amazing. The tool can do pretty much everything, creating apps, websites, and even meal plans. It can also teach you how to code. But what about trading? Can ChatGPT create a trading strategy that is highly profitable with low risk? And can it grow a small trading account fast? Today, we put ChatGPT to the test and asked it to create a trading strategy based on specific indicators. This trading strategy has to be simple and beginner-friendly, so it could be used by everyone regardless of their experience. The results blew our minds as ChatGPT generated a full trading strategy with entry rules and money management in just seconds. We decided to follow the instructions and see how well the strategy would perform. You can just hit on Regenerate Response to get another ChatGPT trading strategy. The first step was to select a trading instrument and a time frame. ChatGPT recommended using a daily or hourly chart for the strategy, but since many of our viewers are scalpers and prefer day trading on shorter time frames, we opted for a ChatGPT trading strategy that works on a 5-minute time frame. We'll also test the strategy on a higher time frame to see how it performs and compare the results. Next, we need to add the technical indicators to the price chart. We began by adding the first indicator. It's called the Money Flow Index, created by Dreams Defined. You can also opt for the regular one, but you might notice that the one we're reviewing today is also offering entry alerts, which would make our job way easier and clearer. The Money Flow Index is a technical analysis indicator that measures the flow of money into and out of a financial instrument over a specified period. You can use it to trade forex, crypto, and even the stock market. It's an oscillator that ranges between 0 and 100, providing insights into the strength of buying and selling pressure in the market. The Money Flow Index, MFI, is a momentum indicator that's often compared to the Relative Strength Index, RSI, that we've previously backtested 100 times. However, the MFI is more comprehensive as it incorporates both price and volume data to capture the flow of money. Typically, the MFI is assessed through overbought and oversold levels. To make it simple, a reading above 70 suggests overbought conditions, indicating that the instrument you're trading may be overvalued and due for a possible price correction. On the other hand, a reading below 30 indicates oversold conditions, implying that the instrument may be undervalued and we should expect a price rebound. For our purposes, we're utilizing a modified version of the MFI, which uses green or red circles to signal overbought or oversold conditions, so all you need to do is wait for these signals. Simple, right? We'll now introduce the Engulfing Candle indicator, which is a widely used technical analysis tool in financial markets. This pattern can indicate potential trend reversals and can be bullish or bearish depending on whether it occurs during an uptrend or a downtrend. In general, the bullish engulfing pattern shows up during a downtrend and indicates a possible shift to an upward trend. It comprises a small bearish candle, followed by a larger bullish candle that engulfs the previous candle. This pattern suggests that the buying pressure has overcome the selling trend, indicating the bulls are in control and the price might rise. Conversely, the bearish engulfing pattern arises during an uptrend and indicates a possible shift to a downward trend. It comprises a small bullish candle, followed by a larger bearish candle that engulfs the previous candle. This pattern indicates that the selling pressure has overcome the buying sentiment, suggesting that the bears are in control and the price might fall. Honestly, this is one of the best ways to analyze the market. Always look at the chart as a sequence of events that can provide insight into future movements. It's like reading a story from left to right. For the third indicator, we'll add the exponential moving average with a default length of 9. To filter out minor price fluctuations and obtain a longer-term moving average, let's increase the length to 150 or 200 period. The exponential moving average is an essential tool used in technical analysis for identifying potential entry or exit points and trends in financial markets. Unlike the simple moving average, which gives equal weight to all data points, the EMA assigns more significance to recent prices, giving more importance to the latest market moves, making it more sensitive to changes in the market. Traders frequently use the EMA to identify trends and possible support or resistance levels. When an indicator is popular, it becomes more solid and reliable. Usually, when the EMA is ascending and the price of an asset is trading above it, it indicates a bullish trend. while a falling EMA and price trading below it could suggest a bearish trend. By the way, don't forget to hit the like and subscribe buttons if you enjoy this content. It only takes a second to do, but it means the world to us and helps support our content. Alright, our chart's ready now, and we have all the indicators plotted and ready to be used. We can proceed to define the entry conditions for a long trade. As per this ChatGPT trading strategy, we should first confirm the presence of a bullish trend by ensuring that the price is above the 200 EMA that indicates the market is on an uptrend. The next step is to identify an oversold money flow index, which is indicated by a green circle. The formation of a bullish engulfing pattern is confirmed by a green triangle that can be seen below the price bar. That's all we need for entering a long position. Once a bullish engulfing pattern is formed, we should enter a long trade on the next candle and set the stop loss below the low of the pattern. If you want to add another layer of confirmation, you can wait to see if the following candle is green or not, but that could get you late into the trade. For a better entry, the best approach would be setting up a buy limit order. To manage the risk, we can aim for a 1-to-2 or 1-to-3 risk-to-reward ratio and adjust the stop loss to break even once the price moves in our favor. You can use a trailing stop loss if you want, but to increase the win ratio of this strategy further, we can consider entering a long trade when the price retraces back to the EMA, which can offer a better price entry. To initiate a short trade, this ChatGPT trading strategy suggested that we first need to identify a bearish trend by observing the price movement below the 200 EMA. The next step is to wait for the money flow index to become overbought, which is confirmed by a red circle. This means that the price of the instrument might be approaching its resistance and it's time to sell. Then we should look for a bearish engulfing pattern as a signal of a potential trend reversal. A bearish engulfing candle can be confirmed by a red triangle above the price bar. No need to stare at the chart the whole time. You'll see a market entry signal the moment the condition is met. Once we see the bearish engulfing candle, we can enter a short position either immediately or after the next candle is formed and place the stop loss above the high of the bullish engulfing pattern. The same money management rule should be applied as for long positions. We tested some of the signals provided by this strategy on EUR/USD on a 5-minute time frame, and the results indicate that the strategy is highly effective and reliable. We'll now evaluate how well this ChatGPT trading strategy performs on higher time frames. Let's take a moment to appreciate the artificial intelligence technology for giving us such a solid trading strategy. It appears to have a high success rate and incorporates sound money management principles. Maintaining discipline is crucial when trading, and following a well-defined plan can help avoid emotional decisions and overtrading. It's important to regularly evaluate the performance of the strategy and make adjustments as needed, as there is no guarantee of success in trading. Backtesting and demo trading are recommended before using real money, and proper risk management is essential to handle potential drawdowns. We hope this video was helpful. Don't forget to like and subscribe to our channel for more trading strategies in the future. Tell us in the comments section, do you think that trading will be 100% managed by artificial intelligence in the future? Happy trading!